How to navigate ITR filing with the salary, pension, and capital gains in assessment year 25-26, means for the financial year 2024-25. So welcome to RR Legal Talks. Today's video is your complete guide to filing your income tax return ITR for assessment year 2025-26. That is for the financial year 2024-25. Especially if you have income from salary, pension, and capital gains. We will cover with the correct ITR form, latest rules, deductions, and walk you through the step-by-step online filing process. If you are a working professional, a retired individual, or an investor, this video is for you. Who should file ITR for assessment year 2025-26? Under section 139, 1 of Income Tax Act, every individual whose gross total income before deductions exceeds the basic exemption limit must file a return. You know the basic exemption limits for the financial year 2024-25 as per new regime. Now we are talking about the financial year 24-25 with a new regime and assessment year 25-26. So the range of income up to 3 lakh tax regime tax rate is nil. 3 lakh to 7 lakh range of income, the tax rate is 5%. 7 lakh to 10 lakh, the tax rate is 10%. 10 lakh to 12 lakh, the tax rate is 15%. And range of income 12 lakh to 15 lakh, the tax rate is 20%. And above 15 lakh, then the tax rate is 30%. This is the tax regime and slabs. Of course, senior citizens above 60 years can benefit more under old regime. So it is important to compare both regimes before filing. Now choose the correct ITR form. This is most important. For the financial year 25-26, we are talking about assessment year 25-26. For the assessment year 2025-26, use ITR-2 if you have an income from salary or pension, have a capital gains, shares, mutual funds, real estate, etc., and do not have income from business or profession. Relevant rule, Rule 12 of Income Tax Rule 1962, file ITR-2 for the assessment year 2025-26, for the financial year 2024-25. Income from salary. So what to report? From Form 16. So gross salary, that is basic plus allowance plus perquisites, less exempt HRA under section 10(13)(a), and less standard deduction under section 16 IA, that is 50,000 rupees. Professional tax, if any. Also verify with AIS. AIS stands for Annual Information Statements, and Form 26AS. So better you verify Annual Information Statement and Form 26AS. And coming to pension income, so how it is taxed? Regular pension taxable under income from salary. Family pension taxable under income from other sources. Then deduction 15,000 or 1/3 of the pension, whichever is lower under section 57. Senior citizens can claim section 80 TTB deduction up to 50,000 on interest from banks and post office savings. Then we'll come to capital gains, shares, mutual funds, real estates. Further, short-term capital gain, long-term capital gain, STCC, LTCC. Short-term capital gain on equity held up to 12 months, that is below 12 months, taxed at the rate of 15% under section 311A. Long-term capital gain on equity held below 12 months, tax-free up to 1 lakh. Long-term capital gains excess taxed at the rate of 10% under section 112A. That is LTCC. Then coming to property sales held below 12 months. So long-term capital gain at the rate of 20% with indexation under section 112, and can claim section 54 exemption if reinvested in another residential property. Documents required: broker CG statement, capital gain statement, sale deeds, purchase deeds, indexation tools, CII for financial year 24-25 to be used, and claiming deductions and choosing tax regime. See, if you opt for, you can claim section 80C 1.5 lakh, that is LIC, PPF, ELSS, PF, tuition fees, home loan principal, and section 80D, medical insurance premium, section 80Z, donation to eligible institutions, and 80TTA, 80TTB, that is interest income. So after new regime, then default from financial year 23-24, no deductions allowed except NPS, section 80 CCD to EPF, employer contribution, Agnivir Corpus Fund. If you can switch between regimes while filing, compare and you can switch. This is the step-by-step filing on online portal incometax.gov.in. Select file income tax return. Assessment year, select 2025-26 and select ITR-2 online mode. File details, you have to fill the details: salary, pension from Form 16, capital gains from broker reports, and deductions under Chapter 6A. Choose the regime, old or new, validate tax computation and submit. And after that, verification and ITR acknowledgement. E-verify within 30 days. Options are there: Aadhaar OTP, net banking, EVC via bank or DMAT, or physical signed ITR file to CPC Bangalore. So frequently asked questions: can I use ITR-1 if I have a capital gain? Answer is no. Use ITR-2 if there are any capital gains, even if exempt. And another question: can I report losses from shares? Yes, set off and carry forward losses under section 70-74. What happens if I don't file? Penalty under section 234F, 1,000 to 5,000. Also interest under section 234A, B, C. Then final tips: download and cross-check EIS and Form 26As. Compare old and new regime using free calculators. Store proofs for deductions for 6 years. And use authorized tax filing platforms if you have any doubts or confused. If you found this video useful, give it thumbs up and share it with someone preparing their IT returns. Drop your questions in the comments. Subscribe to RR Corporates. Other channel we have, subscribe to RR Legal Talks. Thank you.